We are studying accrual accounting, and in this module we will be focusing on accrued expenses. You can see on the screen there are different names that we use for this accrued expense thing. It is also known as outstanding expense. We also call it as expenses in arrear. We call it expense due, expense owing, expense not yet paid, or expense payable. So all these are the name that we can use alternatively for the same concept. And the concept is that the expense belongs to the current accounting or reporting period, but cash has not yet been paid for it during this reporting period. So how to account for this expense payable or owing expense or expense due? This is what we will learn in this module. So, in fact, there are two ways to do accounting for this expense due. One account method and two account method. So this is what we will be learning, that what are these one account and two account method. First we will discuss one account method in which only one ledger account is prepared, which will cover this expense owing and expense for the year, both together in one single account. So let's see, in this practice question, there is a rent which we are paying quarterly in arrear. So the important thing is we are paying in arrear, and our reporting period is 12 months, starting from 1st January 2000X8 and ending on 31st December 2000X8. And these are the payments that we made during this period. January 31. Remember, we are paying quarterly in arrear, means at the end of each quarter. And quarters, you know very well, is of 3 months. So first quarter, in this question, you see that ending on 31st January. And then we are paying, means this quarter comprises of November 2000X7, December 2000X7 and January 2000X8. We paid 9,000 for this quarter. Then we paid on 30th April, covering February 8, March 8 and April 8, 9,500. Then July 31st, 2008, we paid 10,000, which is covering May, June and July. And then on 31st October, we paid 10,000 for the month of August, September and October. And then on 31st January 2009, we paid for November, December and January. Here, I just want you to do one practice, just to point out that in this period, which months are falling. So November 7 and December 7 are not the months falling in this period. Yes, you are right. January 8, February, March, April, May, June, July, August, September, October, November and December. So these are the 12 months which are falling in this period. So as we discussed, that the concept is belongingness. Okay. So the period which belongs to this reporting year will be taken into expense. Well, let's see. That cash paid during the year is 9,000, 9,500, 10,000 and 10,000. Total comes to 38,000. I'll take you back. Cash paid during the year. Remember that as to payment, we made payment during the year. This will tell us how much cash we paid during 2008. Okay. So during 2008, we paid this much. During 2008, we paid this much thing. Okay. This we are paying in the year 2000x9, next year. Well, now come forward. So 38,500 we paid during 2000x8. Opening accrual, how we'll get it? Yes, this November and December we are paying in January x8, but these were due, or you can say these were belonging to the previous year. So 2 months rent. So if we paid 9,000 for 3 months, 2 months rent would be 6,000. Easy. So we'll put it here. Opening due or opening accrual minus, and closing accrual. Well, here we see that during the year, this box is saying that we paid till October 8 during the year. So November and December we are making payment in the next year. So these two are still due, not yet paid. So we'll calculate it like this 10,500, which we paid on 31st January x9. This will be taken here, and 2 months will be calculated like this, and this 7,000 will be added, and here we go, 39,500. Okay. So one account method is that cash paid. Again, see 38,500 is cash paid. We'll take this cash paid figure here. Cash paid means rent payable account will be prepared here. One single account will be prepared, and cash paid will be appearing in the debit side of rent payable account. Rent payable debit and cash credit. This is the accounting entry for this, posted in the debit side. And then what we will do, closing rent payable will be taken in the debit side. We have to add. And opening rent payable, as we calculated there, will be taken in the credit side, as we have to subtract from this figure. And this is the final figure, 39,500, which will be closed in the profit and loss account. So profit loss debit and rent payable account credit, this is the accounting entry. Okay. Well, this is one account method. Let's discuss two account method now. So in two account method, we will be preparing two ledger accounts. One for the expense account and the second one for its reciprocal payable. So let's see how do we work out this two account method thing. Same example in which the rent is paid quarterly in arrear, and these are the payment period falling in this year. The same thing. Exactly. So working is also the same. How we work out this issue under two account method, and those two accounts are rent payable and rent expense. So you can see that rent payable is purely a liability account here, and rent expense is purely a nominal head, means an expense head. So for this rent payable, opening balance will be brought forward in the credit side, and cash will be debited to the rent expense. So rent expense debit and cash credit. These are the two basic accounting entries first we will do. Then what we see that we have to transfer this 6,000 over here. Okay. So that this opening balance that we put in the credit side has now been transferred to the rent expense account. And thereafter what we see that this 7,000 is still payable. What we do, we debit rent expense account by giving credit to the rent payable account. So this rent expense account is complete now, and means this cash paid and payable both are the amount of expenses appearing in the debit side, and then 6,000 which does not belong to this current period will be subtracted, and this balancing figure will go to profit loss account. And when we will make total of this payable, credit side first, 13,000 minus 6,000, this carry forward will be taken to the balance sheet. Accounting entries. So the accounting entries are simple, that rent expense is debit and cash is credit, simple. And then what we do, that opening balance, as we see that we have to transfer it in the rent expense account. For that, rent expense account is credited and rent payable account is debited. We have also seen this arrow over here. And then rent expense debit and payable credit. This is the amount of expense belonging to the current year but not yet paid. So rent expense debit here and rent expense debit here. Okay, with cash and with a liability. Okay, and ultimately the balancing figure we are closing in the profit and loss account. So rent expense will be closed, means it will be credited. So let's see the ITTRs in this module. I trust that by doing this practice, now you would be confident that this is something very interesting, as I told you earlier as well. So the ITTRs for one account method are that separate ledger account for expense is not maintained in one account method, and balancing figure is close to the income statement in this one account method, and closing balance is presented in the balance sheet because it is rent payable will be taken to the balance sheet as liability. For two account method, the ITTR is that opening balance brought forward and closing balance carry forward appears in the payable ledger account only. Okay, and expense account is closed into the income statement or profit and loss account because it is a nominal nature of account and should be closed in the income statement, should not be carried forward. Thank you.